Friday, traders. This is Blake Morrow. You are listening to the Daily Roundup webinar. I hope everybody's having a great trading session. It's been kind of sloppy out there. First of all, let's talk about the dollar Canadian. So the dollar Canadian's come under pressure, following the Bank of Canada. And I'll tell you, I'm going to get a little worried about the dollar Canadian should we drop below this. We drop below the 200-day moving average, or more importantly, the support around the 134.90. Because what will happen there is that there's going to be obviously some selling pressure. There's been a buildup of U.S. dollar Canadian longs, and actually, if you look at like Citigroup, their positioning has shown that their traders, or their data shows that a lot of traders are short Canadian. Now, that doesn't necessarily reflect every brokerage firm, but it's one that I do kind of pay attention to. And so the reason why I bring that up is if we break below the 200-day moving average, you might get some of those Canadian shorts, getting out of their position. So, so be careful with the dollar Canadian should we drop through this 200-day. Now, it would make sense that would happen based on what equities are doing. So let's talk a little bit about equities. Equities are, you got the S&P that's really trying to break this resistance. Obviously, if we break the highs from, I guess that was Monday, if we break those highs from Monday, then that is going to, allow us to make a move back towards those highs. And if that happens, then you're going to get some continued dollar selling. That's what I would think. Nasdaq is struggling a little bit, but we're seeing a rotation. Sellers coming out of excuse me, really quick. Just give me 1 second, guys. You got sellers that are hitting the bid, and Nasdaq rotating into some of the Dow stocks. And the Dow, as you can see, is we're pushed up right up against trendline resistance as well. Now, let's talk a little bit about some of these commodity currencies, because obviously the Aussie dollar, in my opinion, is up against really key resistance. It is trying to break out. You take currency pairs like the Aussie yen's trying to break out as well. We're trying to break above that triangle. So you got the Aussie pairs that are trying, but that doesn't mean that they're going to succeed. We have to go with the assumption right now that they're trying, but you have to imagine we've been, we've made this move to, this is 161% extension of this last move in the Aussie. It stopped right at 70.40 or 70.38. We are back down into the support zone. So if the Aussie is going to bounce, it's going to bounce around here. That's what I would think. But that doesn't mean it's going to. It could come all the way back down towards the 69.80s before bouncing. But the point I want to make here is we are against critical resistance. I think what turns the Aussie bearish is actually a break back below some of the support zone, and that could really clear out some of the late buyers, people that got stopped out, people that are following risk higher, and they're just not getting paid for this move. They're just not getting paid for this breakout in risk and a breakout in the Aussie. So you're going to see a lot of selling come in if we start trading in the 70s or 80s. I think it's too early to make that determination if it's going to. The U.S. dollar Mexican peso, it's still struggling, just kind of sitting there. The euro is in breakout territory. I expected it to come down a little bit. We are at risk of a false breakdown, I think, if we get below the 113.80s. But right now you have to go with the assumption that the euro is breaking out, and it is breaking higher. Again, dollar weakness is evident, when the stock market is breaking higher. But if the stock market really stalls here, we could see a reversal of some of that. And do keep in mind that the ECB is tomorrow. That is something else that we should be aware of, that the ECB is tomorrow, and the European Council meetings at the end of the week. We're going into the weekend. Nissim asked about crude. Let's talk a little bit about crude oil. So crude is higher today, marginally. Where is it? I just passed it. But we are nearing some really key resistance. First of all, this last down leg, when we came out of this channel, the 127% extension takes us to 41.25. Now, what you'll see here is this dotted red line. This dotted red line is very important, because if you go over to a weekly chart, let me you go to the weekly chart, you can see all this horizontal support. This is the breakdown when crude finally broke that support and it went to zero. Remember, it went actually negative after that. So crude oil is really at some key resistance, and it's a tough call. I mean, it's a tough call to be long crude at this point, but it's also a tough call to be short. I think below 38 would turn crude at least near term bearish, right? Below 38. But while we're above this, while we're above 38 bucks, and while stocks continue to be strong, it's really hard to assume that it's going to roll over. We almost have to go with the assumption that the crude may continue to go up. And one of the common questions that we get is how can crude go up in this environment? No one's driving. People are during a pandemic and everything else. But the bottom line is, producers could just cut output, and when they cut output, it's going to raise prices, because they're just going to make it more quote unquote rare, if you will. So for right now, I think crude is stuck between 38 and obviously this 42 level is going to be pretty big. While we're here, I don't know if there's a whole lot to do with crude, with the crude market at this moment. So just something to think about. Now, Benedict in the chat room, he was looking at the pound New Zealand. So I'm going to bring it up really quick. We're looking at this possible inverted head and shoulder pattern here in the pound New Zealand. But honestly, I don't want to get like really bullish until, or at least consider it, until you're above this trend line, right? This downtrend line's capped us ever since the blow off move here post-pandemic shutdown, right? And he mentioned that there's a trend line that comes in below, and it does, but it comes in actually a little bit further than where we're currently at. I think you could say it comes in right here at 180. Let's just call it 188, 189. But if you want to draw it like that, you also could and say, well, we're basically probing a trend line. I really think that the trend line comes in after new lows, which would be down here around the 189 level. And considering we're sitting at 191, it may have a little bit further to go to test that trend line. So just some food for thought. I do believe that we're trying to develop an inverted head and shoulder pattern, but the proof is in the pudding here. We need to see a crack above some resistance in order to get that going. Let's see. I know we took a look at the euro, but let's go ahead and take one last view of the euro dollar, just because the euro, I'm expecting this level right here, this 113, 80 to 70 level. This should offer a lot of support for bulls somewhere down here. Okay, so just think about that as we make an approach. All right, guys and gals, I want to thank you for joining me on the daily roundup. Remember, if you're not using ForexAnalytix, make sure you do so. It's a choppy market, and as Polly put it today in the chat room, it is very sloppy. It's like the market wants to. You know what? There's one other thing I want to talk about. Everybody wants to sell the dollar, right? Everybody wants to sell the dollar because, dollar weakness would bring in, equity market strength, so on and so forth. But, I think we have to also acknowledge the fact that that the dollar index, is really sitting on all sorts of key support here. Lots of key support down here. I figured below 96 would usher in some dollar selling. It has, but then the dollar has then since reversed a little bit. So let's pay attention to that that 95.60, that support on a horizontal basis from early June. Okay. All right, guys and gals, have a good one. Thanks for everybody for tuning in, and I'll see you in the chat rooms. Thanks, everyone.